Okay, so hey everyone, and I hope that you are all doing great. Well, in the previous lecture, we talked about what is age. Let me remind you. Remember, guys, age is everything in trading. The day you start trading, you are just a trader by action, but the day you discover your age, you become a trader by identity. That's the real difference between just pressing button and truly understanding the market. In the previous lecture, we also talk about CRT candle range theory, and I hope you all remember what we studied in the last lecture. Let me remind you, our last topic was about the monthly candle. In the previous lecture, we discussed how it form, how it move, and when and where it create high and low. We also learned that each monthly candle has 4 pages, and then we divide those pages like page 1 is equal to week 1, page 2 is equal to week 2, page 3 is equal to week 3, and page 4 is equal to week 4. So every month, each week represent a new page in the story of that monthly candle. Now today we are going one step further. Today we will study how a weekly candle form. All right. Okay, but here is something interesting in weekly candle. A weekly candle has 5 days, not 4, so we cannot divide it in the way we did with the monthly candle structure. That's why instead of breaking it into pages, we will focus on understanding how it behave as a complete range. And as I always say, our job as a trader is simple. Our job is to catch high and low of the candle, and from high and low of the candle I mean high and low of the range. Now the concept I will share today might feel a bit unique or different from what you have seen in the last lecture, but trust me, once you watch this lecture again and again, everything will start to make perfect sense. So let's get started. Let's understand how a weekly candle form, how it create, and how we can treat it as a range through the lens of candle range theory. Okay, so our ultimate goal is simple, to catch the high and low of the every candle, and that's exactly what we will learn throughout this mentorship. By the end of this mentorship, you will fully understand my vision, what I have been trying to show you since day one. You will see why I trade the way I do and how I maintain such a strong risk to reward ratio. Remember, you only become a good trader when you master risk to reward ratio, when you have a good risk to reward ratio. And in my case, I have got one of the highest risk to reward ratio trades out there. And to be honest, don't take my word for it. Go and check my Twitter account, go and check my Telegram group. My trades and my result, etc., are all there. In previous lecture, we studied the monthly candle, and we saw how it contains 4 weeks, each week representing a phase of the candle. We divide those phases week by week to make the concept easy to understand. But today we are moving deeper into the weekly candle. So each weekly candle has 5 days. So this time we cannot apply the same division we use for monthly candle. Now you might ask, we are day traders, why should we even care about weekly or monthly candles? Remember, through these higher time frames, monthly and weekly, we create our bias and understand our order flow. Think about it. If you know your monthly direction and your weekly direction, don't you think it become much easier to trade? Remember, when your bias is clear and your direction is clear, you can take any trade confidently, and you can easily hold it longer because you already know where the market want to go. Today our main focus is to understand how a weekly candle form, how it react, and most importantly how we can catch its low and high, how we can catch its low in a bullish scenario. Okay, so before we dive into weekly candle, we first need to understand how price actually deliver. Let me introduce you to something called EBITDA. All right, EBITDA. EBITDA. Okay, so EBITDA, the interbank price delivery algorithm. This concept explain how price moves, how liquidity is engineered, and how every single move in the market is delivered with precision. Now, this will be just an introduction, a small glimpse into these delivery pages or structure. I am not going to explain it in full detail here because it would take a lot of time, and there are already great explanation available on YouTube. So at the end of this lecture, I will tell you exactly where you can watch it in full detail. For now, I just want you to understand the idea, like how price delivers, because once you understand this, everything will start to make sense. And trust me, after this introduction you won't have any problem connecting these dots later. Okay, so the market mainly moves in four forms or four stages, and interestingly these forms are exactly the same as the candle pages we discussed in our last lecture. So the first page is called consolidation. All right, N S O L I D A T I O N, consolidation. So this is the first page. All right, in this page the market moves in a tight range. Both buyers and sellers are active, and the market stays inside a range to collect order from both buyer and seller, and the market building liquidity before its next move. And this page work like our page 1 accumulation. Alright, now after this consolidation, the second page is called expansion. Alright, expansion, this is the second phase. So after collecting enough order from both sides, the market choose its direction following the higher time frame order flow. And once the expansion start, the market doesn't wait, it move with momentum because it already decide its direction during consolidation. And after consolidation, expansion is 100% confirmed. There will always be expansion after consolidation, because in consolidation the market stays inside a tight range, and the market cannot stay whole day or whole time in consolidation. So after consolidation it have to blast, and this blast phase is called expansion. All right, so after expansion, the third phase is called retracement. Okay, so let's talk about both retracement and reversal. So after expansion, uh, there will either be a retracement or a reversal. All right, uh, retracement, excuse me, retracement or reversal. reversal. So after consolidation, expansion is guaranteed. There will always be expansion after consolidation, but after expansion there can either be a retracement or a reversal. So if the order flow is bullish after expansion, the market will retrace. Usually it tap into a higher time frame key level to collect a new order, and once those orders are filled, it continue in the same direction. But if it's a reversal, the market will first take liquidity from the previous side. For example, if it was a bullish, it will take buy side liquidity and then flip bearish, and vice versa. Now here is something important. You will always see the market in these four forms, no matter which pair or which time frame you are studying. This is how interbank price delivery truly works. Every single move, the push, the pullback, the fake out, it's all part of these four stages repeating again and again, and that's how price deliver itself. And once you start identifying these four forms, you will stop seeing random candles. You will start seeing purpose and logic behind every move, and it's important. Therefore I introduce it before how a weekly candle form, because it will give you advantage, and I will show you. And for better understanding of these pages, I will highly recommend you to watch ICT core contents. You will see how these four forms connect with the entire structure of the market, how institutional traders use liquidity, order flow, and time to deliver price in this exact way. Once you understand these four forms, you will never look at the market the same way again. You will begin to read the market, not just watch it. Now each day within the weekly candle follow these same behavior. If Monday is ranging, Tuesday will usually make the manipulation or expansion move. There is about a 40% of chances that the low of the weekly candle forms on Monday, and in other case also there are 40% chances, if 40% chances that the low of the monthly candle will form on Tuesday. The remaining 20% could happen on Wednesday or on Friday, because sometime Friday also create deep manipulation moves before closing the week. So the market isn't always 100% perfect. That's why I will show you every possible scenario which happen a lot, so you can understand it better and read it in real time. Now the question is, when does the low form on Monday and when does the low form on Tuesday? So let me show you that when does the low form in bullish scenario on Monday, and when does the low form on Tuesday in bullish scenario, and vice versa, same in bearish. Okay, all right traders, now listen carefully here, because this is the part where thing really start to connect. Okay, so to catch the high and low of any candle, it's like catching a reversal on lower time frame. Let's suppose price is dropping, and you have marked a key level or a key zone on H4, and once price step into that zone, that's your moment you look for. That's the moment you look for confirmation. Whatever your confirmation model is, once you sight on the chart, and once you confirm, it's your confirmation. That's your entry time, that's your buy time. All right, now remember what actually look like a simple retracement on H4 is actually a full reversal on lower time frame like M5 or M3, and this is how multi time frame logic work. Now if you remember earlier, we talked about consolidation and expansion, and trust me, after every consolidation, expansion is 100% guaranteed. Consolidation simply means range. The market cannot stay in a range forever, it must have to be break. So it's like pulling a vehicle. from backward, and when the engine start, it's launch forward. When the engine start, it start moving forward. So that's exactly how the market behave. That's how a sudden movement occur after the accumulation. Now after expansion, um, one of two things can happen. As I told you before, that after consolidation, expansion is 100% guaranteed, but after expansion there can either be a retracement or reversal. It's all depend on higher time frame buys and order flow. So if higher time frame is bullish and liquidity rest above, then expect a retracement and a continuation of and a continuation of that trend. And if higher time frame is bearish, then expect a reversal and then you move down. So always start from your higher time frame buys and always start from your order flow. So every daily candle act as a phase inside your weekly candle, and as I said before, that there are 40% chances that the weekly low can be found on Monday, and 40% chances that the weekly low can be found on Tuesday, and only 20% chances on Wednesday and on Friday. Now let's talk about how that low form. All right, first let's talk about when the low can be formed on Monday. All right, okay, all right. So 1 second. So if Friday was an expansion, then Monday will usually retrace about 40-50% of the Friday candle range before continuing in the same direction. So Monday act as the retracement phase of the weekly candle. Not only Monday, actually every new open candle retrace to the previous candle range up to 40-50% of that range. Every new open candle retrace the previous candle range up to 40-50%. And in this case, Monday act as the retracement phase of the weekly candle. Sometime Monday will even sweep Friday low, and that's not part of that retracement. It's something different. It's part of a model which is called Friday range model, which we will cover later, which is part of our mentorship, but we will study it later in our intraday model, etc. So excuse me. So if there is pending liquidity on Monday and your higher time frame is bullish, then trust me, there are over 80% chances that price will tap that untested key level inside that Friday range, and then it will give you a reversal on lower time frame, and then it will continue bullish trend for the rest of the week. And this is how the weekly candle low form on Monday. So the market, remember that the market move from key level to a key level, from internal liquidity to external liquidity. Now internal liquidity can be in the form of order block, FVG, imbalance, etc. All right, and external liquidity can be any old high or old low. It can be it can be previous day high, it can be previous week high, previous month high, previous year high. All right, so both internal and external liquidity is pending inside Friday range, then it's almost like 95% of chances that the Monday market will first clear its internal liquidity, then it will move to external liquidity. And that's how every new candle retrace into that previous one. Like the market have to first retrace and to first take its internal liquidity, then it will take its opposite external liquidity. So remember this simple rule: once price steps into internal liquidity, then mark the opposite external liquidity. It will be the next. Now let's talk about when the low can be formed on Tuesday. Alright, when the low can be found on Tuesday. So it's very similar to the previous one, like when the low can be found on Monday. Excuse me. So Friday and Monday created consolidation, then Tuesday will manipulate Monday low, acting as a reversal pace, and also this kind of or this type of delivery, it's actually intraday model which is called the Monday range model, which we will cover later in this mentorship. Now let's come to our main point. So when you see a Monday is consolidation, a Monday is consolidating, then expect Tuesday to be the real move, expect Tuesday to be the expansion move or the reversal move. If Tuesday take Monday low, then it will be like Friday is consolidation, and Monday will also be the part of that consolidation, and Tuesday will be the real move. Tuesday will be the reversal, and this is how actually excuse me, this is how law of the weekly candle form on Tuesday. And I'm telling you again that after every consolidation, expansion is guaranteed, and expansion will come. But after expansion, there can either be a retracement or a reversal. It's all depend on your higher time frame buys and order flow, and that's why I always say, and I always do post etc on my Twitter, that once you understand your buy, the rest is simple. It's either continuation of the trend or reversal. So there is nothing else. Now remember, you are every or you are in a daily candle play its part inside that weekly structure. It's play part of its play part of these spaces. It's play one of these spaces inside that weekly candle range or inside that weekly candle structure. Now let's head to the chart so I can visually show you how each page form, and when the low can be formed on Monday, when the low can be formed on Tuesday. Let me show you on the chart, then I hope you will understand it better, because once you see it on the chart, everything I said will start to click. So let's go to the chart. Okay, so alright guys, now let's look at an example when the low can be formed on Monday. So I have already told you this before, but let me remind you again. If Friday was an expansion day, and above that we have some resting liquidity, then we can expect Monday to give short retracement and then continue in the same direction. So usually this retracement goes around 40 to 50% of the candle range, and most of the time inside that Friday range there is an untested key level or key zone on H4 or even on H1. So when price steps into that zone, it gave a reversal on lower time frame, like it will look like a short retracement on H4, but it will actually be a reversal on lower time frame like M5 and N15, and that's the reason why a candle retrace inside the previous close candle range or zone. Let me show you example. Okay, so let me show you an example according to what we say before, like how and what's the requirement and what's the condition, and when the low can be formed on Monday. So let me show you a good example. Alright, let's move to daily time frame. Okay, so that's the Friday candle. You can see the Friday candle itself look like a good expansion and also a reversal. And what do you see here? Here we have clear drawn liquidity here in the opposite direction. Alright, let me mark it like dole drawn liquidity. Now what's next? Alright, that's the Friday candle, and we can expect Monday that Monday will retrace inside that Friday candle, and there will be a key level on H4 time frame or on H3 time frame. It will tap that key level and then it will continue the buy direction. So let's see what actually happened next. Alright, let's see all this move on H4 time frame for better understanding. Here you can see retracement. Let me show you how this retracement look like. You can see this is the retracement, alright, which we discussed before, that every new open candle retrace into the previous close candle. This is the previous close candle, alright, that's the previous close candle, alright, and the new candle retrace inside that range, and this retracement happen for tapping H4, a key level from H4 or from H3 to continue the trend, and this retracement is actually taking is for taking internal liquidity, and once it take internal liquidity, then we have to mark the opposite external liquidity, which is here dole. Alright, let's check this example in H4 for better understanding. Let's go to H4. Okay, so this is our H4 time frame. Let me mark it 1 second. Well, here you can see we have block, it's a key level on H4 time frame, and the market tap at key level, which is internal liquidity, and it sweep the previous candle. You can see here, 1 second, let me show you. This candle has swept the previous candle low and close above on the previous candle high, which is a good sign of continuation of the price. And here the market take internal liquidity. So as we say before, that once the market take internal liquidity, next we have to mark the external liquidity, which is confirm the market will take it. So in this example you can clearly see how price tap into that key level inside that Friday range, alright, and that key level was internal liquidity. And as I always say, once the market take internal liquidity, then next target will be the external liquidity on the opposite side. So you can see here how perfectly the market play out. This is the first scenario when the low of the weekly candle can be formed on Monday. You can clearly see low of the Monday candle. That's the low of the Monday candle, which I showed you before, that it sweep the low of the previous candle and gave closing above the previous candle. And if you remember in the first lecture, I told you, I just touched you that wick mean a retracement, a reversal, and closing mean continuation of the trend or continuation of the price. We will talk on this in upcoming lecture, alright. And let me remind you that in lecture 3 we will specially talk how to trade CRT, which means that how to trade every single candle. We will discuss special lower time frame entry, alright. So this was the first example when the low can be formed on Monday. I will send a few more example in our Telegram group, alright. So now let's talk about the second example when the low can be formed on Tuesday. And this is the example where Monday continued the trend of Friday, alright. So here Monday act as a retracement, alright. Now let's move to the second example. Okay, so alright guys, now let me show you the second example where the low of the weekly candle can be formed on Tuesday. So let me remind you what we stated before. So if the Friday candle was a consolidation, then Monday will either give us an expansion or it will continue the trend of the Friday candle. And if Monday just continue the range, then Tuesday become the main point. That's where the reversal and the weekly low can be formed. Now pause here for a second, zoom and tell me what do you see here. Alright, zoom here and tell me what do you see here. Now here pause for a second, zoom in and tell me what do you see. So if you spot this FVG in this fair value gap, this one second. So if you spot this FVG, this key level and the resting liquidity of these two candles are right of this candle and the candle after this, one second, then congrats, you are on the right track. But if you saw something else, then try to be focused, because that's exactly what this mentorship is all about, training your eyes to see what truly matter. And you can see here we have an FVG and the liquidity resting below the low of these two weekly candles. So let's mark that and then drop to the daily time frame to check it more closely. So let's move to daily time frame. Let's see here what we have. Okay, alright, so here you can see we have unfilled FVG here as well, and we have liquidity of this candle as well. So what can we expect here? So if the market come down to this fair value gap, then here we can expect a retracement upside and a reversal as well. Now look, and you can clearly see that unfilled key level. So first we have to mark this key zone of weekly and daily, and here you can also see. So here you can see the Friday is a consolidation type candle. So next we can expect the Monday candle that it should take the low of this candle, and also we have the liquidity of Wednesday candle as well, and below we have the liquidity of 2 week. So we can expect a sell side move, and we can expect a reversal or retracement from this key level of weekly FVG and daily FVG. So let's see what actually happened next. Alright, so here you can see Monday is the continuation of the Friday trend, and Tuesday actually they went to that key level, and Tuesday here is the retracement of the previous week, and actually this what I was expecting, and that's what you should expect. So these were the two examples. I hope you truly understand what I was trying to show you, how the weekly candle low form on Monday and on Tuesday, and price, and how actually price deliver. So remember guys, every single weekly candle low form like this, if it is happen on Monday or on Tuesday, every time the low was formed on Monday or on Tuesday, you will see the same price delivery exactly like this. If you find a candle that doesn't follow like this, then you must did a mistake in backtesting, etc. Alright, because every single candle form like that. So if you understand this, backtest it. If you did not understand this, watch this lecture watch this lecture again and again until it click. All these lecture will stay in the group until you master them. So keep watching and learning, and remember guys, if you ever get stuck or have a question, just DM me. I will always be here for you all. And your assignment for this lecture is find a 5 example where the law of weekly candle is formed on Monday, and 5 more example where the law of weekly candle is formed on Tuesday. Send them in the assignment group for the review. So that's it for lecture number 2. Our lecture number 2 end here, and in the next lecture we will talk about in the next lecture uh, we will talk about how to trade CRT, how to take entries, when and where to take them. We will also touch on lower time frame entries in real market condition. So be ready for it. And it's already here 1:35 1:35 at night here. I hope you all learned something valuable today from this lecture. Take care, backtest well, and send your assignment in the discussion group. And I will see you all tomorrow in the group. Good night from here. See you soon in lecture number 3.